What's going on, everybody? This is Caddy with Money Investing. So, very excited about the markets today. We've got a lot going on. We've got the inflation data coming out at 8:30. We've got the bond auction today. Very important stuff. So I hope you guys are having a great day and a great morning. So let me see if we have anybody watching right now. All right, we got 7 people. Make sure that you guys drop a like. Welcome. I hope you guys can hear me okay and see the screen okay, because those are going to be the most important things today. So we got a lot to discuss. Interesting. Is it not live right now? Hey, can you hear me okay? Gwen, what's going on? Yeah, I don't know what was can you guys hear me okay, and can you guys see the screen? Because right now I don't know why YouTube shows no concurrent viewers over here. Maybe it's like lagging a little bit. But as long as you guys can hear me okay, that should be fine. Perfect. All right. Awesome. Welcome. We've got a lot to discuss. What's going on, Jimmy? What's going on, Gwen? Welcome on board. Palma, welcome on board. So we've got the auctions. We've got the bond auctions today at around 1 p.m. Eastern. Very important. Very important for the equities market and for the debt markets, capital markets in general, for the U.S. economy. And then we've got the inflation data coming out at 8:30. We've got about 23 minutes left, and then we're going to find out the CPI for February, for the month of February. It's going to include maybe food and energy, and then excluding food and energy, we'll find out what the analyzed rate's going to look like for inflation, because I know there's a lot of fear about inflation in the markets right now. So we'll discuss about that, and then we'll discuss about how the equities market react to potentially the CPI data, and then of course the bond yields, which are going to go through the auction. So thank you so much for joining. I'm going to break down some of the reports. Again, if you guys enjoy it, find it helpful, the live stream, make sure that you drop a like. It really helps out with the channel. Share this live stream with other people. We're going to probably do this for maybe a couple hours, maybe 30 minutes into the market open, maybe 40 minutes into the market open. We're going to break down some stocks and talk. And our focus today is going to be to learn as much as we can about the bond market, the inflation data, because that's what's really going to dictate where we go in the future, over the next 12 to 18 months. Because it's very important. So again, shout out to all of you guys. Thank you so much for joining. Good morning, good evening, depending on where you guys are watching from. And we'll discuss a lot of individual stocks as well. I'll cover a lot of stocks, but again, the most important stuff is going to be the debt markets that we're gonna break down. So, all right, let's take a look at how many people we have. We got about 48 people watching. So again, thank you so much for joining in. I'll let a few more people kind of come in. And then once we get up to speed, once we have a lot of people, and then I'll break down certain reports and what we can expect. As of right now, you'll notice that, let me actually break down this into two. So the SPY is up a little bit, or actually it's down close to 9 basis points. As of the time of this video, we are slightly down. And this right here is going to be the QQQ. We are pulling back substantially, down about 44 basis points, right? So we'll see how the markets react overall intraday. I mean, yesterday was really strong, to say the least. The markets, QQQ more specifically, was up close to 4%, and then SPY was up close to 1.5, almost 1.4%. So definitely very strong day all around. All right, let's take a look at how many people we have. So we got 108 people. Again, make sure that you guys drop a like. It really helps out with the channel. and I want your guys' engagement as well in the live stream. So let me know, what are you guys most excited about? What is one stock that you guys are watching really closely? So good morning, good evening. Thank you again for joining. Could we see another crash today because of the debt market and bonds? We'll discuss that. We'll discuss about that as well. So again, our focus is going to be on the capital markets and corporate debt, government debt, and talk about inflation data, which comes out in about 20 minutes. So very interesting day. Ross, that's good to know that your QQQ calls are printing. That's awesome. Good morning from Michigan, Manoj. I'm really excited to have you on board. Good morning from Denmark. All about Tesla and Palantir. So yeah, we'll talk about a lot of individual stocks as well. So, all right, QQQ ETF down about 37 basis points right now as of pre-market, and then we've got SPY down about 7 basis points. Let's take a look at some other stocks here very quickly. So Tesla is slightly up in the green, up about 29 basis points. It's interesting because QQQ is down, so I'm surprised that this is up. Apple is down close to 1%, trading exactly as $120 right now as of the time of this video. Amazon is slightly pulling back as well, down about 26 basis points. So again, very interesting stuff. Because if there's another dip, more opportunity to buy it. I agree. And this has been an interesting opportunity for the Nasdaq, down about 12% in correction territory. A lot of stocks have been down. Palantir, if you were to take a look, it's up close to 1% intraday, or pre-market, just before the market's open. And NIO up close to 2%, trading as high as $42. So we'll see if those gains actually continue or if we do see any type of a pullback. So all right, let's take a look at XPeng here really quickly. Pre-market. Up over 2%. Then we've got Li Auto up close to about 13 basis points, so pretty much flat pre-market. Then we got CCIV up about 4 basis points right now pre-market. Square up close to 0.5%. So all around, there's not really anything that's moving other than GameStop that's up 13%. AMC reports their earnings later today, so I know that a lot of people are going to be interested in that. And Tattooed Chef also reports their earnings. So this right here is going to be the complete breakdown on the companies that are actually reporting today. So you guys will notice that we've got AMC after the close. We've got Tattooed Chef after the close. We've got Oracle and Skills also reporting after the close, that I know a lot of folks are going to be interested in those 4 companies. And then we've got Express. Not really sure if anybody's going to be watching Express. But other than that, that's pretty much it. Are there any other companies you guys are excited about on the day that are reporting earnings, or maybe tomorrow or later this week? I know that everyone would be watching DocuSign. I know I will. Then we've got Microvision as a really good, solid company reporting as well. Then we got JD.com reporting their earnings. So those are going to be some companies I'm watching. But are there any companies that you guys are going to be watching in terms of earnings remainder of this week? All right, so Gwen, we'll break down Palantir as well. The first resistance, it needs to break out over $25. That's been kind of like a headwind for the stock for a long time, right? So that's going to be the level that we're going to be watching. But to quickly go over exactly what's going to be happening today in the markets, this right here is going to be the complete breakdown. So if you actually go over to the government website, Treasury Direct, you'll be able to see all their upcoming auctions and what their offering amount is, the auction date, the issue date, and the announcement date, right? So today we've got the 38 billion offering, so that's going to be an auction date of 3/10/21, so that's going to be March 10th, 2021, and they're going to issue those bonds on March 15th, depending on the demand, and of course the rates and the prices are going to be a significant part on the day, right, in the bond auction, and that of course is going to ripple into the equities market, the capital markets, because it's a very important note. The 10-year is basically seen as like the benchmark rate, because a lot of banks, a lot of financial institutions, and we've discussed this in my previous videos as well, they kind of tie all their debt products, so like credit lines, business loans, and mortgages. You're talking about different debt product like credit lines and business loans as well, and auto loans, so like car loans as well. They're all tied to that 10-year note or the 10-year rate where that's trading. So it's very important for us to find out where that settles, where the investors are coming in, and what they're buying and selling are going to be. So again, good evening, Lily. Thank you for joining. We're going to break down the CPA or the CPI report, the inflation report from February that comes out at 8:30 a.m. Eastern, and we're also going to talk a little bit about the bond auctions, which is very important as well. So 38 billion is going to be the offering amount. That's what they're trying to raise today. So you'll notice how U.S. bond auction will test if the yields are high enough to attract buyers. So this actually came out very recently yesterday on March 9, 2021. So you'll notice that when it comes to the relief package being discussed in Congress, one of the most important questions is how is the government going to pay for it, right? That's the biggest question because we are printing all this money. How is the government going to pay for it? One way to do it is by issuing treasury bonds. So we know that the U.S. is really big on issuing treasuries. There's a lot of demand for U.S. debt. The U.S. government being backed by the U.S. government, there's really not much of a concern about defaulting, right? Because the U.S. government is really known for not defaulting on its debt. So that basically the big test is whether we're going to see any type of a demand or not. Yes, so yesterday, Alex, you're right. So yesterday, I think we had the 3-year notes or the 3-year T-bill, so to speak, their auctions, and today it's the 10-year notes. So you'll notice on Wednesday, the government will hold an auction for the 10-year Treasury notes, and these are the all-important long-term bonds that serve as the benchmark for everything from mortgage rates to auto loans, but demand for government bonds has not been so hot lately, right? So the reason why we're seeing the yields kind of go up recently is because of the prices coming down for the bonds. So they have an inverse relationship. Bonds come down, so bond prices, when they come down, the yields or the interest rates actually go up. So think of it as, as an investor, you want to lend money to the U.S. government, but you want it to be at a much higher rate. So 1.5, 1.6 isn't going to cut it for you. So you're like, hey, bring that yield up to 2%, maybe 2.5, even higher. Then maybe I'll consider kind of buying that bond from you and maybe lending you the money that you need. So that only happens when there's a significant amount of demand for bonds, and when there's a lot of demand, bond prices go up and the yields come down. So right now we're seeing the opposite of that. There's not really much demand is what they're saying, hence resulting in the bond prices to come down and the yields basically going up, and that's what's causing the equities market to also kind of pull back because the debt, the cost of borrowing actually goes up, makes it a less desirable environment to grow for companies. So it's like crazy how the whole economy has like a whole domino effect between so many different things, but it's always important for us to really understand how everything works, even though we're not going to be more trading or investing in bonds. But I'm personally not going to be doing that, but it's always important for us to understand how that's going to reflect the equities market. So that is an issue because the government auctions of bonds to finance a lot of day-to-day operations, and to that last year's relief packages and the potential 1.9 trillion of additional aid, and it means that the federal government needs to plow a lot of debt. Reading further, the sheer amount of obligations that we have to fulfill haven't been this large on a percentage of GDP basis since the World War II, says Winnie Cesar, who's a head of credit strategy at Wells Fargo. And to make matters worse, investors have not been buying many government bonds lately. Many investors have been selling their holdings of bonds, demanding higher interest rates to own bonds, right? So that's exactly what we discussed. So if you are seeing a lot of selling pressure, prices coming down, yields going up, so that's what's causing basically the markets to kind of have a ripple effect as well. Ian, shout out to you. So again, thank you so much for joining. The bond auction will be at 1 p.m. Mike. So this right here is going to be the website that you can actually go to. That actually goes over. So Treasury Direct, you can go up to upcoming auctions, 38 billion. That's going to be on March 10th, 2021, and I believe it's at 1 p.m. So right here, so it says inflation data for February is due at 8:30 a.m. Eastern. And then we've got the numbers. So however, the numbers show to gain attention coming ahead of Treasury's auction of 38 billion of 10-year notes at 1 p.m. Eastern. So that's when the auction is for the 38 billion issuing that they are doing. So going back to this, you'll notice that if the auction doesn't go well, so if the auction doesn't go well and not enough bidders show up at current levels, then rates will have to spike higher in order to attract buyers, right? Something that we have discussed. Again, if there's not enough demand, the prices will continue to fall and the yields will continue to go up to basically make that deal a little bit sweeter for investors to buy US debt. So, and that could have a domino effect because the yield on the 10-year bond influences rates throughout the economy. She said that companies might have to pay more on their own bonds and mortgages could get more expensive because quote-unquote borrowing costs for the U.S. government increase. Borrowing costs for pretty much everyone else in the U.S. economy also increases. So everything is tied to the 10-year note, almost everything. It's like a benchmark note. And the Federal Reserve will also be watching Wednesday's auction too to see if it needs to step in, and we'll see how they decide to step in. But thank you so much, Alex. I really appreciate that. And you know, no, they do, but you know, they also need to issue that so another way they do that, because obviously with too much money printing, you know, there's going to be a lot of concerns about inflation in the future and how much velocity of money we're seeing. So another way that the US actually raises capital is through debt financing. Think of it as a very similar company as well, issuing a lot of corporate bonds. So the way that company actually issues money or raises capital or raises money is through equity financing. So of course that's like going public. Private equity is like, you know, the company is private, it's not issuing any stock, but you have Series A, Series B, kind of like private issuing of stock. And then you have the debt markets, right? When you have the debt issuance through bonds, so that's where corporate bonds come into play. That's when the BBB, AAA ratings come into play. And it's the same thing with the US government as well. They are issuing $38 billion worth of 10-year notes through this auction process to see if there's buyers and investors from all around the world interested in buying US debt. And if there's not enough demand, the prices will come down, the yields will continue to go up, and when the yields reach a certain level, then the buyers will be like, hey, you know, that's good enough for me. I can actually step in and basically buy some US debt, because the US again is known for paying its debt. It's backed by the US government. Again, the default rate is pretty much close to none. So and then of course the 10-year note plays a significant role in other parts of the economy, so the mortgage rates, auto loans, so on and so forth. So let's take a look at if there's anything going on Bloomberg. Again, guys, if you guys enjoy this video, make sure that you drop a like. It really helps out with the channel. We're going to talk a little bit about inflation data as well, so that actually comes out at 8:30 a.m. Eastern.
To say you are manufacturing.
So we got about 8 minutes left to go, and this right here is going to be the CPI data. So last numbers as of January, so January 2021, you'll notice that it was up close to 0.3%. The CPI again is going to be the consumer price index. It takes into account like a basket of commodities or goods, like food, energy, you know, retail, a lot of different things. All food items, less food and energy. So basically is a good representation of inflation, although some people will argue that it's not a great measure of inflation because it's not in real time and it's a lagging indicator, which of course I agree with, but there's no real way to track the different prices of commodities and you know, different goods other than actually looking at the consumer price index. So you'll notice as the measure of the average change over time in the prices paid by urban consumers for market basket of consumer goods and services. Indexes are available on the US and various geographic areas. So select utility, automotive fuel, food items are also available as well. So you'll notice that the next February 2021 CPI data is scheduled to be released on March 10th, so today at 8:30 a.m. Eastern. So very, very excited about that as well, because that of course is going to, we're going to find out if that actually is going to play some type of a role on the economy as well. So you'll notice inflation data February due at 8:30 a.m. Eastern will give some indication as to whether the great inflation scare of 2021 needs to be taken more seriously. The consumer price index is expected to have risen 0.4% in the month of February, while the annual rate is expected to have risen to 1.7% from 1.4%. So if you go over to this was 0.3% in the month of January, and it was close to 1.4% for the full year. So you'll notice that in January, the consumer price index for all urban consumers rose 0.3% on seasonally adjusted basis, rising to 1.4% over the last 12 months. So that is what the expectation is. So rising from 1.4 to 1.7 potentially. And the Federal Reserve has also said that they want inflation to go up above 2%, run modestly above 2%, and they want the average to sit at 2%. So if it comes out, you know, the only surprise I see for the inflation data is coming out much higher than expected. So coming out well over 1.7, 1.8 on an annualized basis, and then coming out well over 40 basis points in the month of February. So that happens, that can scare the markets a little bit from an inflation standpoint, because most of us are expecting close to 1.7. And even if it does come a little bit higher, that's okay, because the Federal Reserve has said, you know, that we want it to run a little bit higher than 2%. So again, thank you so much guys for joining in. We've got about 6 minutes left for the inflation data to come out. So again, this right here were the latest numbers in the month of January. So 0.4% non-seasonally adjusted in January 2021, 0.3% seasonally adjusted, and then 1.4% for the full 12 months since January 2020. So Again, thank you so much for joining in, you guys from everywhere, from all around the world. I really appreciate you guys. Right, so if the bond yields go up, it will inflate house prices. No, not in a certain way, because if bond yields go up, so if the 10-year note goes up, the cost of borrowing actually goes up on the mortgages. So if yields go up, they're directly tied to mortgage rates. That's what the banks look at as a benchmark rate. So the cost of borrowing goes up. So if the mortgage rates go up, then you're going to potentially see like a withdrawal from buyers. And if there's not enough demand from buyers for houses, because last year we saw a very, very low interest rate environment. We saw record refinancing. We saw record new purchases for new homes because of the low interest rate environment, right? Everybody wanted to get a new home or refinance their current mortgage because of the low interest rates. But if the yields keep going higher, they're going to potentially get tied to the mortgage rates, hence less demand for houses, hence potentially decreasing the housing market. So in terms of home prices, again, that's kind of like my estimate and where I could personally see kind of have a ripple effect on that. But this right here, again, we're going to keep a close eye on this. We've got about 4 minutes left for the inflation data to come out, for CPI to come out as well. So let's take a look at this. And so CPI, the core CPI, which strips out more volatile elements such as food and energy, is expected to have risen 0.2% with an annual rate staying at 1.4%. And the ability of CPI to track actual inflation is disputed due to its inability to track the changes in consumer spending patterns in real time. And that's a big deal in the year of the pandemic. All right, guys. So again, thank you so much for joining in. Really appreciate you guys. We're going to talk a lot about different stocks as well. But we're going to let this ad kind of play out because we've got about 3 minutes for the inflation data to come out. So that's going to be the CPI. How excited are you guys for the markets? How was yesterday for you guys? How green were you guys yesterday? I really want to know. So let me know in the live chat, how was yesterday for you guys and what are you expecting from the markets today? Green or red? Are you guys expecting green or red from the markets today? $500% on Tesla call. That's awesome. Ian, that's great.
It's also a very healthy outlet.
That's awesome.
Encourage it as something that we do on a regular basis. But I do find that when people come in,
up 9%, James, that's fantastic. Green, that's great, that's awesome.
Whatever's on their mind and letting it go, being able to just take out their frustration and their anger.
46%, Ricks, that's fantastic.
Like this and be able to break some stuff and release some tension without going to jail.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances.
Very green, up 17%, that's great. QQ calls up 180%, that's fantastic, that's awesome. You guys are killing it.
Guest composers and musicians, plus critically acclaimed archival concerts and more. Visit BSO.
Again, guys, if you guys want access to our trading view charts, if you guys want access to the Discord, the Patreon link is going to be down in the description below. And I've also pinned it at the very top.
I have asked the Securities and Futures Commission.
So we'll see, as soon as that opens up, we should be seeing some CPI data available.
The viability have our own Hong Kong version of specs. We remain very confident on the competitive.
York, that's awesome. Yeah, I always recommend, sitting on at least some cash because you never know about these markets. I mean, there's always going to be buying opportunities, right? Alright, let's listen to this now. This is going to be important.
The NIO York City for our audience worldwide. This is Bloomberg Surveillance alongside Tom Keane and Lisa Bravitz. I'm Jonathan Ferro. Your inflation print just seconds away. Your equity market comes in a single point. Pretty stable on the S&P 500. With economic data this morning, let's bring in Michael McKee.
Good morning, John. Well, this will be the most important release of the month next month. But this month is the month before we get to the base effects, which will be pushing inflation way up. And we don't see a big jump here. We see a CPI on a month-over-month basis up 0.4, the core up just 0.1. That leaves us unchanged, basically, from the, well, actually a tick down on the core to 1.3% on a year-over-year basis. The headline goes up 1.7% on a year-over-year basis. It was 1.4%, but that was forecast a 1.7% increase for the month. Gasoline, one of the big culprits here, up 6.4% in February. It accounts for over half of the increase, so you can expect that to feed into next month as well because oil prices continue to rise. Food up just 0.2 in February. We should see services rise on a sort of regular basis once we start to see the economy open up, but right now services, less energy, up just 0.2 during the month. And the rent, owner's equivalent rent, the number that we look at as a substitute for housing costs, that one was up 0.3%. That's the biggest gain in some months because it's been basically just at 1/10. Rents may be stabilizing around the country after everybody moved out.
Look at the data a little bit more. John Farrell, we do get a market move.
Yeah, we do, and I think it's important. I was taught a long time ago there's information content in the data. There's also information content in how a market responds to the data, and for market participants, the latter is much, much more important. This is a small case study.
Look at that.
How this market
Look at this, because this came in much better than expected. The core CPI came in at 1.3 versus 1.4. That's excluding food and energy.
Then you've got what the market is worried about. And off the back of this, Tom, an inline print for inflation, and what do you get? Equity futures higher on the Nasdaq, up by about 51 points, now advancing 0.4 of 1%, and Treasury yields come in to about 154. And to Mike's point, the big test comes next month when the base effects kick in.
Well, very quickly, Mike McKee, what is your sense of how distant we are from 2% core? I mean, that's the lofty goal, but measure that gap, not arithmetically, but the emotion of getting to 2% core CPI.
Well, I think what you're going to see is a rather quick change in the CPI annual figures because we're going to get into the next 2 months. In March and April next year, we had big declines in the CPI. It just fell off the cliff. And
massive amount of volume coming in too.
So if we see that happen, mathematically you get a big jump, and then if energy continues to move as it is, the headline will move up to 2% rather quickly. The core maybe not as fast, but it will get there in the next couple of months. And the Fed is expecting this, and that's going to be the real market debate. Does the Fed react to this? Do the markets push the Fed to react to this?
There's also a question, Mike, about services and whether we start to see the pressure there, whether we can see potentially the cost of going out and doing things go up at a time when people really don't have the ability completely to freely go out and do things due to ongoing shutdowns and closures. What's your expectation there? What are we seeing in the services side of inflation, and how much is the Fed really looking to that?
We're not seeing much in terms of services inflation, particularly compared to goods. And the big question is, when will people feel safe enough to go out? And then what are the limitations going to be? Are there going to be enough restaurant seats for the people who want to go out? Food prices are still contained at this point. Are they going to jump? And do we see enough retail goods out there for people to buy when they feel like they can get out?
We're going to have to migrate forward here. We've got a busy Calvin. Moffitt Nathanson coming up here in a moment. Michael McKee, thank you so much. We'll do media here in a bit. Futures up 16 right now. The VIX
look at the SPY.
22.86. Mark Howard quickly here with BNP Paribas, senior multi-asset specialist. Mark Howard, is the inflation worrisome?
Not really, Tom. I think Mike covered it really nicely. And what's important, as he just referred to, is the Fed is going to be looking at this very closely. The market today is discounting the Fed's reaction function next week. And this means that Chair Powell is not going to have to pivot at all. And we're only going to see subtle changes in their forecast in the dot plot. And so it's not the risk event that some people might have been worried about.
A subtle reaction maybe from the Federal Reserve, maybe no reaction, Mark. How markets respond to it, though, That's more critical at this point for market participants. How do you think
Yep.
people will respond to those higher inflation prints that pretty much everybody predicts?
Well, I think, Jonathan, it's a very interesting dynamic because I think that is going to be baked into the growth narrative that we're hearing increasingly from corporate America. At least I was talking earlier about the wave in corporate issuance and the amount of supply, not just Treasury, but otherwise. But corporate America is seeing growth, and they're pursuing growth in a number of different ways, not just the most beaten down companies like the airlines, but in other sectors. And they're doing it through M&A, through expansion, through investment, through sustainability initiatives. And so I think the inflation numbers, the higher numbers, are going to reflect both corporate activity and, of course, consumer activity when these fiscal outlays come into their pockets.
You know, there's a question of whether people have left tech for dead at a time when it continues to see secular growth and really something that will continue for a long time. John was pointing out some of the market moves. In particular, probably the biggest reaction is in the NASDAQ, with the NASDAQ shooting higher 0.7%. I find this interesting, John, because to me what this highlights is that people have been looking for a reason to buy the dip in big tech, and it seems like the idea of not getting that much inflation is playing into this story.
I think it tells you what people are worried about. It sort of underlines what people are worried about, Mark. And a question that came up on this program a little bit earlier is whether the price action that we've seen in inflation-protected securities and anything that gives you that kind of protection is a conviction trade or just a hedge on a big position in the equity market in growth stocks. How do you process that?
Well, I think it's kind of like you guys were talking about Japanese equities yesterday. Inflation has been kind of a tricky trade as an offensive trade for a long time. It's almost been a hedge for many, many years because of the secular trend in inflation. So I think it's more of a hedge, to be honest, Jonathan. Of course, there are tactical and macro funds that move it around rather aggressively. But I think it's more of a hedge against the broader fixed income bucket.
Mark, do you buy the argument that we could see 10-year Treasury yields move to 2% and we could still see the S&P higher?
That's a great question.
Absolutely, Lisa. The challenge is the speed at which we get there. If we shot up to 2% over the next 2 months, that would be very disruptive to equities and particularly to the NASDAQ. But if it happens gradually and if it happens not just based on U.S. growth, but on global growth, and I'm looking to the ECB tomorrow to provide some incremental signs of initiatives there that they may pursue to stimulate growth.
Come on. What are the incremental signs that we're going to get? Smoke signals? I'm serious. What are they actually going to do, Mark?
Well, Tom, there are a number of things, whether it's monetary policy, whether it's open market purchases, or whether they're tweaks, or whether it's browbeating the fiscal budgeteers of different countries. They are behind the U.S. in fiscal. They're behind the U.S. in vaccine, and so the ECB is going to do what it can to stimulate growth there.
Well, John, this raises a question what they can do, right? I mean, ECB has been having some issues actually following through.
All right, so everybody new joining in, thank you so much for joining in. Let's take a look at how many people we have watching. So we have a little bit over 685, almost 700 people watching. Again, thank you so much. If you're new to the channel, we do a lot of fundamental and technical analysis on the markets. Make sure that you subscribe if you're new. Hit that notification bell. The inflation data came in much better than expected, especially for the core CPI. So let's take a look at this right here. So in February, and this was updated right now, just about 7 minutes ago, the consumer price index for all urban consumers rose 0.4%, so that was the expectation, rising 1.7% over the last 12 months. Again, expected, not seasonally adjusted. The index for all items less food and energy increased 0.1% in February, up 1.3% over the year. So that's what's driving the markets higher because we were expecting a little bit higher in terms of inflation. We came in much better than the expectation. So QQQ now in the greens, up over 0.5% as of the time of this video pre-market, and the S&P is also in the green, up a little bit over 27 basis points. So we also have the auctions later today at 1 p.m. Eastern. That's also going to be very, very important. And let's take a look at where tech is trading. So a lot of these stocks that were definitely affected by the CPI data. So GameStop still up over 12% right now, trading as high as 277. We've got Riot up over 9%. NIO up close to 3.39, so trading as high as 42.75. We've got Lemonade up over 2.6. We've got Fiverr up over 2.8%. Then we've got Tesla up over 2%, trading as high as 688. We've got Palantir up over 2%, needs to break out over $25. Let's see if that actually happens today. We've got Square up over 1.74. We've got Etsy, PayPal up close to 1.3%. We've got AMD up over 1%. I think big tech is still kind of struggling. If you were to look at Apple, down about 24 basis points right now. Let's take a look at where actually it was trading as 121.67, but then it sold off. This was after the CPI. And then Netflix up just about 13 basis points, not really much there. We got Southwest, United Airlines, they're both in the green. Google is up slightly over 0.5%. We've got ExxonMobil, JP Morgan, Wells Fargo. Financials are going to be really affected today. So financials, it's going to be really, really interesting for us to see, where the bond auctions go and where the 10-year yield sits by the end of the day. This right here is going to be Webull. Again, this is not something that I use very often, just to look at the pre-market because I like this view, like the interface. So this is going to be Webull. If you want to use that, you can just go to Webull.com. And then we've got, let's take a look at Amazon, where Amazon is trading. Amazon up close to 0.5% also, trading as high as 3,075. And then Tesla, again, continuing on that rally, up a little bit over 2%, trading as high as 690. You guys think we were going to break out over $700 for Tesla? Break out over 700? Or if we're going to see some type of a pullback intraday for the markets? What do you guys think? So yeah, the CPI is kind of pulling back a little bit. Or excuse me, the QQQ ETF. It's pulling back. Thank you so much for joining in from Sweden. I really appreciate that. So yeah, we'll cover a lot of individual stocks very, very soon.
Down to the opening bell on Bloomberg TV with Kate Moore, BlackRock Global Allocation Thematic Strategy Team Head. There's a title.
So, all right, let's take a look at if there's anything else. See if we can find some more information. So this is a pretty big report. I'll actually have to go over this and make a separate video. But we can go over this inflation report just very, very quickly today. So this is again coming in for February, for the month of February. And the reason why this is considered as a little bit of a lagging indicator is because, a lot of people think that this is, of course, for the previous month. So we're not going to see, a lot of real-time data for that. So this is one month percentage change in CPI for all urban consumers, seasonally adjusted. So February 2021, we were up close to 40 basis points. That was the expectation. So you'll notice how since October, September, we have been kind of ticking higher month over month. So that, of course, is what's up, Alan? Thank you for joining in. So that of course, is going to be, and that was one of the questions that they asked on Bloomberg as well, right? How is the market going to price in the predictable inflation that we are going to see in the future, and what does our pathway to 2% look like, right? When are we going to see inflation go up to 2%? That's what the Fed wants, is modestly run over 2%, kind of averaging out at 2%. So we'll see, what happens. So all items, so 12-month percent change in CPI for all urban consumers, CPI not seasonally adjusted. So this again has been ticking higher since May. So you'll notice that we are going up, and we're sitting roughly at 1.7, I want to say. So that's what they reported, I believe, 1.7. And then all items less food and energy actually went down. So that's kind of what the expectation was for the core CPI, that's excluding food and energy, to go up, but that's actually ticking down a little bit. So you'll notice that red line, all items less food and energy, kind of ticking down, and then this all items actually going up, and that's because of energy, right? Because when you include energy, oil prices were up over 6% in the month of February because, of course, with Brent oil, up running as high as $70 a barrel, and then we had the Saudi attacks, and I would not be surprised if actually in March, because that happened in March, so I would not be surprised if actually in April we see a very similar report where all item CPI actually surges past the core CPI once again, but we'll see when that gets reported. But percent changes for all CPI US city averages, you'll notice that food items, they were up close to 3.6%. So that was going to be unadjusted 12-month ended, and up 20 basis points. And then all items up 0.4. So this is just the breakdown of everything. So energy prices, you'll notice that energy and commodities, that's going to be across the board right here, up 6.6%. And then gasoline, right? So up over 6.4%. So that was the biggest change that we saw month over month. And then we saw that same in January as well, 7.3% each for for like energy commodities and gasoline prices. Fuel oil jumping over 5.4, and look at this, fuel oil prices jumping over 9.9%. So that right there was the biggest sort of catalyst behind this total move, because that's the biggest push across everything. If you were to look at across the board, new vehicles, so new vehicles up a little bit. US used cars and trucks was down slightly, about 1%. The prices for that, because people are not buying cars right now, or used cars maybe. And then apparel was down a little bit, of course, retail sales and people, shopping, medical care commodities, shelter, transportation, all these were down. But the biggest catalyst, I think, was the energy and oil prices, up over 6.4, 9.9, and then 6.6% for energy commodities, and then food jumping, or energy total, and then food jumping close to 20 basis points, and then 20 basis points, and that's what's taking the overall all items up, and then core CPI a little bit down, because when you exclude food and energy, that's core CPI. So energy, February increasing 3.9%. The index for gasoline was again the dominant factor to the increase, rising 6.4% over the month before seasonal adjustment. Gasoline prices 6.9% in February. The electricity index rose 0.7% in February. The energy index rose 2.4% over the past 12 months. So all items less food and energy, the index for all items less food and energy rose 0.1% in February. The shelter index 0.2% in February, with the index for owners equivalent rent increasing 0.3%. And then the index for rent increasing 0.2%. So we didn't really see rent kind of increasing all that much either. So just about a 20 basis point increase. The recreation index 0.6% in February. So that's about that. And then let's take a look at if there's anything else that we need to look into this report. I'll do a separate video kind of going over this entire report. So this right here again is going to be the CPI, which we can also, by the way, find over here. So I think I had that on this chart. So if I go over to CPI on the economy, so this right here again, if you're using your TradingView platform, you guys can take a look at this. You can go over to CPI and then go over to economy. It'll give you like all items and then all items less food and energy. This is going to be a little bit delayed because I don't have like the real-time data for this, but you can also access that on your TradingView chart. So the ticker symbols for that is going to be CPI AUCSL and then CPI LFESL for those if you're interested in looking at that CPI data for yourself. So again, thank you so much for joining, you guys. Greetings from Singapore. I really appreciate that. Make sure that you drop a like. Logan, thank you so much for joining. Let's take a look at how many people we have. So just a little bit over 800 again. The market's pushing higher pre-market. The QQQ is up over 0.5% off of better than expected core CPI, and then all item CPI was a little bit higher. So the inflation is running at close to 1.7% annualized, and then SPY is also up close to 29 basis points, pushing higher as well. The market's going to the moon today. We'll see. We'll see where the 10-year yields sit, because that is also going to be very, very, very important for the markets, because the auction is going to be at close to 1 p.m. Eastern. The yields have been absolutely going to the moon. The interest rates have, and the prices have actually been going down. So this right here is going to be the 20-year Treasury bond. Let's take a look at iShares 10 plus, if I can find that. 10 plus Treasury TLT, that's going to be 20. I should already have that. I'll include that in sort of like, I'll have to find the right ticker, but this is going to be the 20-year bond ETF, which has been coming down like significantly. Again, an inverse relationship between the bond yields and the prices. So let's break that down, on top of each other. So this right here is going to be the 10-year yields. The daily chart. So again, the yield's pushing higher, and then the bond ETF is coming down substantially. So again, an inverse relationship, and today is again going to be the 10-year yields auction day. So we'll see. I vote for a bull run. So again, let me know what you guys think. So yesterday the markets were up, QQQ up over 4%, SPY up over 1.5%. On Friday we had talked about how the volume was substantially higher. So if I go over to this chart and I want to go over the QQQs, you'll notice that we consolidated a little bit sideways. So this right here was a lot of consolidation. We were making lower highs and lower lows. We consolidated above that 297 level that we talked about in our previous videos, right? 297, $300 was the level, and then we broke out yesterday, and right now we're sitting over 309. So that right there needs to act as a new support today. So if today QQQ does a really good job kind of validating that $309, that's a sign of progress. That's a sign of progress in terms of a technical pattern standpoint. So, we don't necessarily want for the markets to kind of sell off here and then push up all the way back over to 325. What we want is a sell off all the way down to this level, breakout, revalidation, retest of that support, kind of consolidate, move up higher, come back down to retest, validate that support, and then break out eventually. So, that's what we want, a slow, steady, gradual increase in the ETFs. That's really going to help the markets over the long term, and that's a healthy move, other than just having like unnecessary volatility and pushing down and up like all over the place. So what do you guys think about the markets today? What are you expecting from the 10-year yields? Are we going to see like the 10-year yields push up to over 1.82%? And again, in that interview that they mentioned was the 10-year yields, the biggest thing or the biggest concern from a lot of investors is going to be the velocity at which or how fast we move, right? So the 10-year yields have been going up drastically over the last few months. You'll notice coming in from like August, it was trading as close to 0.5%, and this right here has been a jump of 200% in like August, September, October, November, December. So in about 8 months. So that's a pretty drastic move. Like that's a pretty fast, like quick move in the yields, right? So what they're saying is if they move in a gradual, slow and steady pace, that's going to be a much easier thing for the markets to digest, other than like for their yields to continue to rise rapidly. And within a few months, if you go up to 2%, that's going to really disrupt the equities market quite significantly. So, all right, Ian, let's take a look at Apple because I feel like Apple is down, or Apple is up now, so close to 33 basis points. It's pushing higher, so that's good. Boeing is up close to 1.7, Delta, Southwest, Amazon up close to 62 basis points, and I think pretty much everything is now starting to turn green. So if you were to look at the broader markets and individual stocks, pre-market, we've got a lot of green on the table. We got a lot of green on the table, guys. Enphase up over 4%. Wow. BRAC over 155. Look at that. PubMatic up over 5. Fiverr up over 4. NIO up pushing higher, up close to 3.8. So let's see if we can break out over $43. It has been pushing higher. Tesla up over 3%. Trading is at $694. Are we going to break out over $700? What do you guys think? What do you guys think? NIO over $43 today. Tesla over $700. Are we going to close above those levels? Or are we going to break down and we're going to see some pullbacks on the day? What do you guys think? Let me know in the live chat. I would love to hear from what you guys think. What are your views on the tech being able to beat the level of inflation in the future? I have a strong conviction that they will be able to beat inflation. And in fact, they will be a big deflationary force in the future as well for a lot of for the inflation in the markets in general. So what do you guys think? Tesla over 700, NIO over $43. Let me know in the live chat. That's going to be a critical resistance there. We're going to cover Roblox as well. Thank you for bringing that up. We will do a separate video. I'll probably do that. A video on Roblox as well. Mike, thank you for watching that video on Tesla and NIO. So I really appreciate that. Russell, thank you so much. Is that Nvidia? That's how you pronounce that, right? Let me take a look at where they're trading, so I can give you kind of my 2 cents on what I think. So I did watch some type of a report from Kathy Wood saying that this stock is heavily undervalued. I still need to do my fundamental analysis on this, so I can't speak whether this is like a undervalued play or how much growth potential this company has or what their total addressable market looks like. But this right here has been an absolutely crazy sell-off for the stock, down about 40%. The RSI and the MACD came incredibly oversold. So if I were to look at, this doesn't have that. So let me bring it up over here. Actually, do I have the... So yeah, I think we've done an analysis on it roughly during the last live streams. $28 again, a really strong support level to watch, and then moving forward, since we are trading above that level, keep a close eye at this support at close to $35. Previous level of support here, so that level, previous resistance, so to speak, so 35.60, 35.50, that level got validated, and right now we are seeing some type of a support at that level. So if you do see any type of a retest, that right there is going to be the first level of support. We are seeing the potential RSI also kind of shift trend and trend higher. All we really need to see is a breakout for the MACD over the signal line, and then a potential breakout over that 200 daily simple moving average. But again, fundamentally speaking, I need to do my analysis and my research on this company to really understand what it looks like for the company. But 35 is going to be the next sort of support, and then see if you can see if this stock can actually break out over $41 or close to $40. That right there is going to be the next resistance for us to watch at close to $41. Previous support. Ian, thank you so much for the donation. I really appreciate you, and I'm glad the videos are helpful from technical standpoint. So this right here was previous support, which is potentially going to be the next resistance. So right now, pre-market we're trading exactly at $40.90. So watch for that level to potentially get broken intraday, and then for the pattern to start making some type of higher highs and higher lows. So that's going to be a trend reversal for NVIDIA. NVIDIA, yeah, I hope that's how you pronounce it. Palantir at 24.98. Let's take a look. So Tesla up at 695, kind of struggling at that 700 level. We'll see if it actually breaks out. NIO up over 4% now, trading above $43. It was trading as $43.18, so definitely pushing higher. Let's take a look at Palantir. So Palantir Technologies up over $25. There you go. We need to close above 25 for Palantir, because that's the level that we've seen a lot of supply and a lot of resistance at. Peyton, what's up, man? How you doing? Thank you for joining in. For everybody joining in, so let's take a look. So we've got 900 people. I'm going to quickly break down the inflation report once again, just so you guys have a really good understanding, because I know there's a lot of people joining in. So we had the inflation data come in this morning at 8:30 a.m. Eastern. So again, this was released 8:30 a.m. Eastern at March 10th. This was February numbers. So you'll notice that the consumer price index, which is the CPI, increased 0.4% in February on a seasonally adjusted basis, rising 0.3% in January. And this right here was the total CPI, including food and energy, and the red line was excluding food and energy. And the biggest catalyst was oil, because oil prices absolutely skyrocketed. Not skyrocketed, but they were up substantially, up over 9.9%. In the month of February. We've got energy commodity prices up over 6.6 and 6.4% respectively. So that was the biggest catalyst behind this move. But when you exclude energy prices, the core CPI came in much better than expected, which is why we're seeing such a pre-market rally, so to speak, for a lot of these indices. So let's go over to this. So the QQQ ETF up close to 68 basis points, kind of settling in after that move, and the SPY is up close to 40 basis points. So we'll see if this continues to persist during the day, because we also have the bond auctions coming up. $38 billion is what the US is trying to raise, which you can also go by Treasury Direct, and you guys can actually take a look at how much they're raising, when they're raising that money. So 9 year, 11 months, so close to 10 years, 38 billion, and then this is going to be the auction date, March 10th, 2021, and then it's going to be at 1 p.m. Eastern. All right, so I'm going to ask you guys some questions now. So when bond prices go down, what happens to the yields? It's going to be an easy one, but what happens to the yields when bond prices go down? What do you guys think? Let's take a look at Amazon as well. Rise up, great, perfect. And then why is the 10-year more important than other bond yields? Why is the 10-year the benchmark rate? Why is the 10-year bond or the 10-year yield is the benchmark rate, and why is it so important? Amazon up close to 80 basis points now. So let's look at all these stocks. Mortgage rates, yep, you're absolutely right. Housing market, mortgage rates, a lot of different rates, so auto loans, student loans, a lot of debt products, credit lines, business loans, you name it, like everything financial institution wise, banking wise, they tie that to the benchmark rate. So lending rates. So you're absolutely right, Ross. You're absolutely right, Fernando. So it makes for a less desirable growth opportunities for a lot of corporations who want to borrow money to then grow, or who want to borrow money to actually buy a house. So it's like the economy kind of tightens, so to speak. Right now, there's a lot of quantitative easing, low interest rate environment, a lot of people borrowing money to basically go out and grow whatever they're growing. So businesses, real estate, whatever that case may be. But when the rates kind of go up, the debt products kind of tighten, so to speak. So the economy kind of tightens from that perspective. So very good, very good. I actually did have like a bond pricing model from school, but this I gotta actually go over this once again because this wasn't working. I mean, I tried to plug in all the numbers from this. So if you go over to the actual, like, you'll notice that the price per 100 is labeled at $99.71 for the 10 years. But this is actually for the prior month. So this is the 10-year that was issued last month in February and not this month. So right now we don't have the price for the 10 years that are going to be issued today. Of course, the auction is going to be very, very important for that. But I got to figure out some. It's like bond such a long time ago. It was like a few years ago. So I really need to brush up on that. But I'll definitely kind of make a separate video on that because it's really important for the macros and to understand the economy and how that has an effect on the equities market. So Amazon up over 72 basis points pre-market. Let's take a look at Tesla. Are we able to break out over 700, or are we still struggling? So 695, 696. We're like almost there. We're kind of like bouncing back and forth. 697.50 is going to be the high pre-market, but we have seen quite a bit of a rally. You guys will notice pushing higher. Peyton, you're absolutely right. Definitely, yes. And then let's take a look at NIO. Up over $43, so kind of staying up there. So pre-market support, if I were to map out a very, very simple support here, pre-market is going to be sitting roughly over there. So you'll notice resistance got rejected, pulled back, broke out, and right now we're back testing that as a really strong support. Right, so that right there, $43 is going to be a support for us to watch. Let's take a look at Apple. Oh. Trading is as 121, so it's also pushing higher. SPY and QQQ also should be up there, so Q is up over 81 basis points, and SPY also up close to 44 basis points. So the biggest thing that we need to know now is that we need demand. We need demand for the 10-year yields. Matt, yes, look at the SPY, rising, pushing higher. So what we need for the bond auctions is that we need demand. We need buyers and we need investors to come in, because if the bond yields, the only reason they're going to come down is if there's enough demand, investors looking to buy U.S. debt, hence driving bond prices higher, yields lower, and that's going to affect the equities market. Because there's a lot of people that are thinking or predicting that the bond yields or the 10-year yields could hit as high as 2%. Again, the velocity or the degree at which we go, the rate at which we go there is going to be really, really important, because if we go there in the next 2 months, that's going to really disrupt the markets. If it takes longer than that, then that's okay. That's going to get slowly and steadily kind of priced into the market and the economy. Let's take a look at if there's anything interesting going on here.
Take it off, and will only get larger with this stimulus bill. And durables, are we going to have supply chain problems that push up inflation as we go forward? Things to keep an eye on as the stimulus gets into the economy. And then you want to take a look at this. At this point, we are looking at increases for the inflation numbers that economists think will jump. The blue line is GDP, and the white line is the inflation numbers, and we expect a big increase. But then look at the dotted lines. They expect them to fall back next year. So the economists we surveyed don't think this is going to be a long-term problem. The issue is, does the market think it's going to be a long-term problem? And for that, the thing to keep an eye on is wages. That's what the Fed is going to be watching. Do wages start to rise? This is the employment cost index version. You can see we bumped right back up after the drop. If wages start to rise, then you're going to have some real fears in the market.
Mike, thank you. And let's just sit there just for a moment. This is what it's about now. It's not an economics question. It's a psychological one. It's not for those of you with an economics PhD. You need a degree in psychology. How does the market respond to this in the months to come? Because everyone that comes on this program agrees on what the data will look like in the next several months.
Look at the cues in the SPY.
Inflation kicks higher. We reopen. It's a country that's increasingly getting vaccinated more and more, week after week, and GDP starts to roar. How does the market respond? Let's get straight to PGIM's Greg Peters on this. Greg, I find the next couple of months to be absolutely fascinating. This tug of war, and just trying to get my hands around how the market will respond, how we'll recalibrate expectations of how policy will adapt. What's your game plan?
Yeah, so I think what you're saying is how will the market actually react when the strong data comes in, right? We've been talking about it now for a better part of a year, but how will markets react? How will the reaction function of the Fed react when the data is actually printing very high numbers? And I think that's an open question. But as far as I'm concerned, I don't think it does change the Fed's reaction function. To me, this is a market trading on a narrative more than kind of the underlying kind of value in the marketplace when I look at rates. So looking forward, I think, is more critical because what could continue to kind of move rates higher here is not the numbers that we're seeing in 2021. It's if 2022 numbers.
Jesus, look at the QQQs. How much up are they? 1.17%.
Temporary improvement in growth, and growth will kind of resume where we were pre-COVID crisis. And I think that's what people should focus on more so than the near-term data.
But you know what happens, Greg? You take the near-term data, it's the recency bias, and then you kick that out, extrapolate it out 12 months. And I think the 22 story is critical too. We take this 12-month rolling view whenever you and I talk, and it's how that 12 months out looks in about 3, 4, 5 months. Greg, when do you think 22 comes into sharper focus as this data starts to kick higher?
So I'm expecting the second half of this year, which is why I'm already focused on it, right? So to me, it's not a question of whether the job market is improving. It's not a question of whether we're going to have strong GDP prints. I don't think the market really cares if it's plus or minus 1-2%, crazy as it is to say. I think it's the first quarter next year will come into focus, and the first half of next year will come into focus in, I think, the third and definitely the fourth quarter of this year. So to me, that is really the sustainability trade to focus on, and not just like, okay, this is a stimulus-driven vaccine rollout recovery trade.
With that in mind, Greg, have you been looking at 30 years at 225, 10s, between 150, 160?
Yeah, so I mean, you know, we definitely think rates over the longer term move back down. But there's such a strong movement in the marketplace, it's a really tough narrative to take the other side of. But I think Mike Collins talked about it on Friday with you, just looking at what's being priced in the market. So the 10-year tenure at the time when he spoke was over 3%.
So, all right, guys, so the biggest question really is from the markets.
Rate environment.
So even the economists think that we're going to get tapped out at 2% when it comes to inflation, core inflation, excluding everything else either. And this is going to be very limited. But the real question is, what does the market think? Does the market think that this is all like, it's not correct? The economists don't know what they're saying, or the Federal Reserve, Jerome Powell doesn't know what he's saying, and we're actually going to run up much higher because of all this money printing? What do you guys think? Do you think that we're going to run up over 2%? For a very long time? Do you think we're going to go into this cycle of like very, very high inflation for a longer time period, or do you think that we're going to have a very limited time with a 2%, a little bit over 2%? Look at the Qs, up 1.28%. The SPY up close to 0.5%. Tech obviously leading, there's no doubt about that. So let's take a look at here. So Apple up close to 70 basis points, and then trading as high as 122. Let's take a look at Amazon. Amazon trading over 1% on the day pre-market. NIO is up Tesla at 698, so we're still kind of struggling at 700. Let's take a look at NIO if it's still validating that 43 level. So yep, so we're still validating 43. Previous resistance broke out, back tested support. Now we're pushing higher even more. We're up a little bit over 5%. Tesla testing 700. Yes, we're absolutely right. Reese, yes, we've got the treasury auctions at 1 p.m. Eastern. That's going to determine where the yields go. Very, very important stuff. And then we've got Amazon, we covered, Apple, ExxonMobil, Chevron. They're up slightly in the green. Let's take a look at where banking is. Financial is going to be very, very important today too. So JP Morgan slightly up in the green, Goldman Sachs slightly up in the green, Wells Fargo is 37 basis points, Citigroup up over 18%, Bank of America also in the green. But they have been selling off pre-market. You'll notice that we are making lower highs and lower lows. Again, this right here, in fact, they were trading as high as, Wells Fargo was as high as 38.50, so we were much higher, and we have been pulling back, so that's interesting. But the Qs, absolutely, I mean, 1.28% coming off of, I'd say, reasonable volume. It's not like we're not seeing any volume. 193,000 shares, 33,000 shares. So let's take a look at JS. That's awesome. That's good to know that you live in Boston too. So 193,000 shares times, let's take a look at the trade price, close to 315. So we're talking about a $60 million trade right here, that volume spike. So it's not like we're going up based off no volume. There's definitely volume there. In my opinion, this right here coming off of a much substantially higher volume at close to 340,000 shares. So we're talking about another $120, $150 million trade, especially right after the CPI data came out. So, I mean, we'll see. I mean, see, that's what the market is pricing in. The market is pricing in a much higher than expected inflation. But if that doesn't happen, then we'll kind of reprice that, and that could actually be beneficial to the market, because earlier we were pricing in a much higher 2%, much higher than that expected inflation, regardless of what the Fed says, regardless of what economists say. But it's all about psychology now, right? It's about, you know, what does the market believe is going to happen in the future. And even in that interview we saw, like Q1 of 2021 Q1 of 2022 and the first half of next year is going to be very, very important in terms of inflation data. And then of course the rest of the months, like March data, April, May, June, are also going to be very, very important, because the economy is now starting to open back up, and we're seeing another additional stimulus of close to 1.9 trillion. So yields up a little bit over 80 basis points. This right here is going to be the sector breakdown across the board. So yesterday, top winners, absolutely consumer discretionary. So that's going to be Amazon, Tesla. And then we've got technology. That's going to be, of course, your big tech. And then we had utilities also go up, real estate go up, materials. Financials were somewhat flat, 21 basis points. And then we've got XLI, that's going to be industrials. XLV is going to be healthcare. So healthcare did struggle yesterday. That's interesting. And then energy also struggled with communication services. Roblox, Johnson, we're going to do a video on it. I'm going to do probably like a separate video on Roblox on the channel very soon. I need to really look into that stock to share my analysis. I haven't really looked into that yet. But QQQ is up over 1.4% now, despite up over 64 basis points. We'll see if this kind of continues to persist, or if you'd see any type of a pullback. So on the 4-hour chart, you'll notice that, you know, we're validating 309, so that's going to be the low for the day. $30 billion valuation. Is that for Roblox, Peyton? I did have an article open for Roblox. Let me see if I still have that. No, I don't think I have that anymore. So Again, by the way, you guys, if you guys want my complete market briefings, the analysis, we do like, I put out like summaries on everything that's going on in the markets over at our Patreon. So if you guys want access to that, the link is going to be down in the description below. You'll get access to the Discord, access to their trading view charts. Again, you don't have to. If you want to get more involved with the community, that's a way for you to do that. That's an option available. I post regularly about a lot of different things on the market briefings and different support levels to watch as well. Yep, $45 price target would make a 30 billion valuation. Interesting. Yeah, I mean, I'll take a look at them and see, if it's a little bit overvalued. Because what do you guys think about Airbnb right now? Airbnb has a market cap of over 100 billion. What do you guys think? Do you guys think it's like a little bit, is it reasonably valued right now? Or do you think it's reasonably priced, or it's a little bit overvalued? What do you guys think? Let's take a look at AMD. Look at AMD up over 2%, back over $80 a share. Let's take a look at NVIDIA. So NVIDIA up also 2%, trading is as 510. Gwen, that's not a stupid question at all. Tax deductible, yes. I mean, I don't know what you mean by tax deductible. Is it, I mean, if it's a business expense, then yes, you can deduct it. But again, I'm not a tax advisor, so I'm not completely sure what you mean by that. So Airbnb overvalued, too high, will take a few years to break out. All right, so the markets are going to be opening in about 14 minutes. Very, very excited about that. Let's take a look at how many people we have watching. So we have a little bit over 1,100 people. Again, thank you so much, you guys, for joining in. Let's see if we can get at least 700 likes. We're at 350 right now. It's just literally tapping that like button to get to at least 700. I really appreciate you guys, and thank you for joining. As always, I'm going to do this for a few more hours, or actually one more hour. Go over the markets and stuff
as well.
Market
as well. Let's bring in BTIG's Julian Emmanuel. Jim's Greg Peters still with us too. Julian, can we shake this near obsession with the bond market in stocks? Can we shake that anytime soon?
We think it's possible that you can, and we think it may happen as soon as this week. You've got to get through the 10-year auction and then the 30-year auction. And if you look at the action in the yield markets going back to a week ago Thursday, when you had that original issue with the 7-year auction that was very poor, basically yields have chopped around here, and for us, that's part of the narrative as to why the NASDAQ is trading better all of a sudden.
Greg, let's talk about that supply just briefly. The supply later, 10s, 30s tomorrow. Any issues on the horizon for you?
Well, something to watch for, but this is just one of many innings to come. I mean, there's a tremendous amount of debt that's coming into the Treasury market here over the next year. So, I mean, this is something that I think we will be talking about. Obviously, what happened with the 7-year tailing last week or so kind of reset people's concerns. And the 3-year went well yesterday, but this is a lot of duration dollars coming into the market. So to me, I think it's really hard to disentangle rates and equities now, because what we learned is that tech is very long duration, and the valuation metric that people are pointing to hold up stocks, for example, is anything that has to do with the yield or yield spread.
Earlier on today, Julian, we were talking about the distinction that you've got to draw between the recovery and the cycle. And Greg making the point that the cycle is the more important factor here when you're taking on extra duration risk. Does the same apply to you in the equity story around the growth versus value debate? Who wins the recovery, the reopening? That could be really short and sharp. We've seen a lot of it already. Who wins the cycle? There's a different answer to that question, maybe.
Entirely possible, John. And look, our view, medium to long term, looking into 2022.
The Qs are breaking out over 316. That's interesting.
When you look at these shifts, they tend to be very long in duration, on the order of 6 years to 10 years. But the problem, as I think you just pointed out, is that this cycle was so compacted. If you think about it, we had a 1-month recession down 31%, and then we've had the sharpest recovery on record. So we don't really know exactly when recovery transitions into cycle. And I would only say that the thing we need to watch out for is what Chair Powell talks about all the time. He wants core PCE over 2% for a multi-month period. But what you're finding out and what you found out this morning is that it's going to be difficult to get there. And that's where we disentangle cycle from the recovery.
Next month, the data is going to look very different when these base effects kick in. Greg, one thing that's really confused me and in fact frustrated me over the last couple of weeks is every time you've seen yields higher and cyclicals in the equity market do well, people run around calling it the reflation trade. Yet in the bond market, what's been driving things has been real yields and not inflation expectations in the last several weeks. I think words matter. Greg, when people run around saying it's the reflation trade, don't we have to be a little bit smarter about what's happening in the bond market, particularly in the last month?
I think you're quite right, Jonathan. In fact, if you look at the price action underneath the bond market over the past month or so, it's been, real rates moving higher, to your point, which is a very different backdrop than inflation moving higher. So what I think most bond participants kind of believe inflation has peaked out, or there's not a lot of room for inflation to move higher. And so all the movement is going to be in real rates, which is a growth story, which I think is a very different backdrop for risk assets as a consequence.
So Julian, weigh in on that. If it's a bond market and yields that are driven by inflation expectations or real yields, how important is that for you as an equity investor, the distinction between the two?
Well, at this point, we're very comfortable with real yield where it is. In fact, to us, it is likely to continue to creep higher. But if you look at the 10-year real yield, you're still solidly negative, just slightly positive in the 30-year. But actually, we think that can happen along with, actual bond yields, again, creeping up. Our view is that when you look at it, going back to what I said a moment ago, it's going to be very difficult to sustain inflation. If you look back to last week, when OPEC made the announcement that they weren't going to raise production in the near term, what was the reaction? Copper sold off. Yep. It tells you that there are feed-throughs that we may not anticipate, and you could get to a point where actually the cure for high prices, particularly as the commodity market is concerned, is the high prices themselves.
It's a really good point. Greg, I want to finish with you on this. The obsession with yields has also been an obsession over duration risk. In the fixed income market, that's spilled over to equities as well, to growth stocks. Greg, you and I haven't had a conversation, I don't think, about credit risk for months now. What are you doing on the credit side?
So on the credit side, the credit cycle is in full swing. I still think we're very much in repair mode, but the cycle is compressed, so things are happening at hyper speed. So I think you will start to see companies lever up again, more transaction, M&A, LBO, and so on and so forth. But the risk reward isn't fantastic, honestly. So investment grade corporates, we see a lot less value. We see a lot more value still in high yield bonds, emerging markets, and even lever loans in here. So I think it's a compression trade, but there's not a lot of room left for spreads to tighten in aggregate. So it's a kind of a tricky backdrop for
So next month is going to be very, very important with the base effects also kind of coming into picture. And 2% is kind of like the target number that everybody's going to be watching for core CPI. That's the level that we need to watch. So we have a little bit over 1,200 people now. Let's get to at least 700 likes. Thank you again so much for joining in. I really appreciate you guys. I am reading all the live chats that you are kind of guys putting in. So again, thank you so much. I'm really glad that these are very, very helpful videos, right? So my goal is to provide you guys with as much information, value as possible, break down different reports. And I absolutely love the markets and the economy and how that kind of has an interwinding effect on every single thing, right? I mean, just because OPEC meeting was last month, they said they were going to raise production, copper prices selling off, and that all has like a ripple effect on the markets, right? So I'm always very, very excited about the markets and how everything's going to kind of come together and affect different things. So good morning, Bruce. Good morning, Dave. Good morning, Peyton, Mohit. Thank you so much for joining. I really appreciate all of you guys. Dave, again, thank you so much for joining. So Nicholas, I think you mentioned, so is this a trend reversal or bull trap? I think this is a solid trend reversal, again, coming in from Friday's volume. I've mentioned how everybody needs to be cautiously optimistic, meaning that we still need to be keeping a close eye on the support levels and some more downside, while making sure that you're taking advantage of those opportunities, right? Because if you're always going to be, or if we're always going to be thinking, well, if this is a bull trap, I'm going to hold off on making a purchase. If it's a bull trap, it's going to sell off lower. That's always going to be like a psychological barrier where you can take advantage of those red days. So regardless of if you think this is a bull trap or not, if the prices are down 20%, 25, 30%, like in some cases Nvidia was down close to 30%, trading as low as 465, right? So I mean, that in general, it represents a good buying opportunity if you've done your analysis, if you know what the fundamental value is, what the growth projections look like for that company, right? So because always we're going to keep asking ourselves this question, well, is this a bull trap? Is this a bull trap? And you're always going to hold off on making that purchase. Instead, understand there's more room to the downside. Maybe nibble in a little bit and make a more aggressive purchase once we see a more drastic move to the downside. But always, in my opinion, if there's red out there, that's like shopping days. Like that's an opportunity to buy. And again, the degree at which you buy changes at the severity of those red days, right? If it's down 20, 30%, a little bit more aggressive. If it's down 3 to 5%, maybe a little bit less, nibble in a little bit. But that's kind of like my 2 cents on sort of like if it's a bull trap or trend reversal. But again, coming in from the volumes on Friday, I'd mentioned that this was very unusual. We saw significant buying pressure come in intraday to push us back to high of days. So the NASDAQ and the S&P kind of consolidated sideways. We absorbed all the selling pressure the past few weeks, the past few months. We consolidated, and right now we are potentially on our way back to making or breaking out of those resistance levels as well. So very, very excited about that. And there's a lot of other tech stocks, absolutely no doubt that they are still down. They are very suppressed with those valuations. The PE ratios have come down as well. So in fact, I actually shared this report today on the Patreon. Again, if you guys want to get access to that, you will get the PDFs, their different research reports, the Excel spreadsheets. We're going to be doing technical analysis for your stocks as well. So if you guys want to join, that's going to be the link down in the description below. But we shared basically this report going over Tesla. Again, this is something that we have shared consistently, and how when Tesla is trading as low as certain levels, how the valuations change in terms of different ratios, just so we have a really good understanding, well, how low are these stocks going to sell off to? Like what price to sales ratio, what PE ratio are the investors comfortable with, right? That's the question that we need to ask, because if you're making an argument, if there's bears and short sellers out there making an argument that these stocks are overvalued, well, as a bull and as a long investor, I can make an argument, well, okay, after this sell-off of 30%, what is the right valuation for these companies, right? What is going to be more attractive to investors? So this is a really good table that kind of goes over that at different prices for different stocks and market caps, and how that valuation kind of comes into question once again from both an undervalued and overvalued level. So, all right, QQQ is up over 1.5% now, pushing higher, and so is the SPY, up close to 60 basis points. We've got about 3 minutes left for the markets to close this for the markets to open. And this right here is going to be the select sector S&P 500 different indices. We've got consumer discretionary, tech pushing higher pre-market. So let's take a look. So the yellow shade you guys see is going to be, so we've got communication services, tech up over 1.37%, and consumer discretionary, that's going to be Amazon and Tesla. And then we've got energy financials kind of flat on the day so far. And then we've got industrial and XLP, which is going to be, let's take a look. So that's going to be consumer staples. So XLP is going to be consumer staples, industrials, a little bit of healthcare kind of flat on the day as well. And then materials and utilities are kind of stalling as well. So those three sectors kind of pushing higher, communication services, tech, and consumer discretionary. So we'll see how all that plays out, and when the markets open, where we actually trade. Let me go ahead and set up those charts very, very quickly. We're only going to include 4 charts, and then I'm going to put together the Webull for us to take a look at as well. So we're just going to put in the 5 minutes on this. All right, so we got Tesla top left. We're going to put Tesla, and we're going to put the 1 minute chart here. Oh, we're up over 700, up over 4%. We'll see if that level continues to hold, or if we see any type of a breakdown. So we got Tesla up here, we got NIO top right. We're going to put the 1 minute chart, trading about 43.79, so we're up over 5%. Let's see if we can actually break out over $44. And that's going to be NIO, pre-market. This is going to be Tesla. And we're going to put in Apple, and we're going to put in Palantir, bottom right. 1 minute charts across the board for all of these. All right, so the markets are open, you guys. So let's take a look at how we trade. Apple up close to 0.5%. So we'll see if these gains are actually, if we actually end up giving up those gains, or if we do kind of stay up there, if there's enough buyers to keep the prices higher, or if we do see any type of a pullback for these stocks. So remember, yesterday we were pulling back, and then we kind of reversed. 15 minutes into the day, if you guys were watching the stream, I'd mentioned that I'm more comfortable with the markets pulling back the first 15-20 minutes. I'm more comfortable seeing red candles first 15-20 minutes, and then kind of consolidating, and a breakout over the middle VWAP is much of a stronger trend. If we do end up making high of day 20-30 minutes after the markets are open, that's a more of a stronger trend for those patterns. So we'll see. It's all about making high of day versus low of day. It's kind of like price action wise where that sentiment goes, and where are we leaning towards. Right now NIO is making high of day, potentially trading as high as 44. So SPY is selling off a little bit, and so is QQQs. So let's take a look at the 1 minute here. The SPY is up 60 basis points, and the Q has been selling off, up only 1.14%. Let's take a look at if that 50 EMA kind of validates that support at close to 315. What do you guys think? Green or red? Let me know in the live chat. Green or red day today? NIO up over 7%. Look, oh my god. Wow. What do you guys think about Tesla and NIO right now? Are we going absolutely to the moon here, or what's happening? Let me know in the live chat. What do you guys think? Nicholas, no, I didn't. That's a great question. I was looking to buy, but then I missed the opportunity. But I'm still gonna wait to see where that next opportunity is gonna present itself. So I'm gonna wait for a red day for Square. But I'll definitely kind of update everybody over at Patreon when I do decide to get in on Square. So we'll see. Green to red could be. It's not unlikely if we turn red, because this is pretty much of a very, very heavy move. A lot of shares being traded. So for Tesla, let's take a look. So we got 728,000, we got 437,000, 237,000. So a lot of shares being traded right now for a lot of these stocks. So NIO up over 8% right now. Palantir breaking out over $25, and we've got Apple up over 0.5%. So let's take a look at the Qs and the SPYs. So SPY pushing up over to 390. And 52-week high is 394, so we're not really that much off from all-time highs. Qs are pulling back, so let's take a look at the select sector indices. So this is where the market's opened. So I'm going to go ahead and put that tag right there, 9:30 a.m. And then we've got, let's take a look. We've got tech, we've got financials and energy kind of leading right now, which is what's driving Qs lower and SPYs higher. So Palantir up to 25.45. Tesla also pushing higher. So new support levels that these companies need to validate. Tesla, $700. I would watch kind of like that support intraday. So let me go ahead and put that support right here. Close to $699, $700. So right at that. So that right there is going to be the support level to watch for Tesla. Let's see if we actually validate that level or if we break down. For NIO, I'm going to put $44 as the next support, and for us to see if we actually stay above that level or if we do end up coming down below that $44 level. So that right there is going to be the support for NIO. And then for Palantir, $25 since we broke out is going to be the next sort of support that we need to watch. $25.20, call it $25, $25.20. So right at that level, like close to $25. And then for Apple, Apple is actually selling off quite a bit. Now it's pretty much flat. Let's take a look at some of the other stocks. So AMD up over 50 or half a percent. We've got Amazon, Microsoft, Corsair Gaming up over 2.35. So massive inverted hammer candle right now for Tesla. So we were trading as high as 717, and then we got rejected to sell off down here. Apple is really selling off right now, and so is the Qs. We're up only 1% right now. We'll see if this continues to push up, but let's take a look at the yields. So this is where the market's opened for the yields 8:30. We are up a little bit over 1%. So energy and financial is kind of leading right now, and tech is down a little bit. Alright, so we are seeing some type of a pullback from NIO, up only 7%, and then Tesla as well. So what do you guys think? Tesla, NIO, close below 700, close below 44, or are we going to close above 700, above 44? What do you guys think? Apple is like watching paint dry. Yeah, it's a slow-moving stock. It's a $2 trillion market cap, so it takes a lot of money to kind of flow in to actually move Apple. But what do you guys think? Are these levels getting validated? Are we going to break down for Palantir $25? Are we going to validate that? Or if Palantir is going to break down below 25? Consolidate is first is better, so Palantir kind of hovering over that $25. We'll see if that level gets validated as a new support. That's how we make progress, right? We don't want to see a breakout eventually over 30. We want to see 25, which was a previous resistance that Palantir struggled to break out of, that level to start acting as a new support. Right now we are selling off, pulling back. So for NIO, we are seeing some type of buyers kind of stepping in. For Tesla, 700 is going to be the level to watch. So we're trading exactly at 702. Let's take a look at the market. So Qs again selling off rapidly down about from the highs at 316. We have sold off a little bit over 70 basis points. So we're up just about 90 basis points now. And the S&P is also pulling back, up only 0.5%. But again, energy and financials. Look at that. Energy taking the lead on the day. So let's go over to some of the energy stocks. Or let's go over. So yeah, energy really pushing up with financials. And Apple is now down. Tesla retested 702. So the low for this candle, $700 right on the dot. And NIO also kind of came down to 44.20 levels. Palantir validating that $25 looks like it. So we'll see if it actually continues to make high of day. And so does Tesla. So we'll see if that, NIO pushing higher once again, up close to 9%. Yep, very, very significant testing levels for these stocks. And Apple is now down 30 basis points. That's what's driving the Qs lower. You'll notice that we are coming down for the QQQ ETF. We are up only about 84 basis points. So let me actually go ahead and include some energy stocks as well in this. So energy is pushing. So Chevron is up a little bit of 1.5%. Chevron is up close to 60 basis points, and ExxonMobil is up close to 1.5% as well. Banking wise, you are seeing a lot of banks kind of take off as well. So they were red pre-market. They were slightly in the green, but Wells Fargo up over 2%, Citigroup, Goldman Sachs all up over 1%, and Apple is really selling off, and Tesla now back below 700. Looks like NIO is also potentially going to break down below 44. Yeah, so Tesla is selling off now, up only 3%, and Apple is also selling off aggressively. So we are down over 0.5%, although Palantir is kind of staying up there. And NIO, again, I fully expect NIO to break down below 44. We'll see. We'll see if that actually gets validated. But I'm expecting NIO to kind of follow suit with Tesla and Apple and break down below 44. And the Qs, again, intraday selling off. Again, this is still the first 10 minutes, guys. This is still the first 15 minutes. This is exactly what we saw yesterday. Not to say that we're going to see a similar rally, but I'm just saying that this right here is a lot of weakness. Right before the markets open, energy financials pushing up. So we'll see if we see any type of momentum towards the upside, if we see any type of a consolidation. So again, NIO breaking down below 44, Tesla breaking down all the way as low as 693. So we'll see if we see any type of buying pressure come in to the market. So let me actually bring out the VWAPs as well. So Apple really pulling back. So let's take a look at Apple. It's down about 0.5%. And we've got Palantir making lower highs, so we'll see if it actually breaks down below that level as well. And NIO is already down below 43.70. Energy now up over 1%, close to 1%. Again, that's gonna be the blue line you guys see. Financials lagging behind energy, up over 70 basis points, and tech down over 30 basis points. So we're seeing a shift once again for energy and financials kind of leading the pack. Again, this is going to be our select sector index, and the Qs really pulling back substantially, and the SPYs are staying up there. Why is the S&P 500 up there and Qs are selling off? Why do you guys think? And I want to hear from everyone. We've got a lot of people watching. So we've got a little bit over 1,100 people watching. So let me know in the live chat, why is the S&P staying up there, up 65 basis points, and Qs are down from the highs, and we're up only 76 basis points. So what do you guys think? Yep, perfect. Yep, you're absolutely right. So we're seeing a little bit of a downtick for energy and financials here. And then tech is now down over 42 basis points. So now tech is potentially the worst performer on the day so far, 10 minutes, 11 minutes into the day. And you'll notice that Apple, again, straight up downtrend. It's just been selling off. Palantir kind of retesting 25 once again. And NIO is back down to 43.55, even though we're green on the day. Even Tesla is a little bit green on the day, but 700 acting as some type of resistance once again. Actually, what was the level that we were talking about yesterday? So let me take a look if there's a level that we talked about. So Palantir really fighting that $25. Palantir is like, I'm not gonna drop below $25. You guys can do whatever you want. The buyers are there. We're not gonna drop below 25. NIO, $44. It's kind of hovering around that level. Tesla trying to break out over its middle VWAP and 700. And again, we're seeing some type of recovery. 10 minutes, 15 minutes into the open. This is what I prefer. I prefer a pullback in the open. I prefer like a lot of weakness and a lot of selling pressure come in the first 15-20 minutes. And we'll see if that actually reverses if you break out over middle VWAP. And if the patterns can make high of day, that's going to be a lot of strength. So if Apple ends up making high of day, breaking out over 122.17, that's going to be a lot of strength and kind of buyers just stepping in. So that's going to be the level to watch. NIO fighting that $44, Tesla breaking out of its middle VWAP. Do you guys think we're going to break out over 720 today? Do you think we're going to make high of days? So again, inverted hammer candle for Tesla over here, which we talked about earlier, and we saw a significant pullback, and now we're breaking out over the middle VWAP. Do you think we're going to break out over 720 intraday to make some high of day? Palantir still validating 25, and NIO needs to break out over that middle VWAP as well. That's going to be the yellow line, and as long as it stays above 44, that's going to be fine. Apple is down a little bit, 0.5%, so we are pulling back on Apple. So NIO is making a move. Palantir almost trying to make high of days. So up a little bit over 5%. We'll see if that continues to push higher. So 25.52, 25.50s, 53. We'll see 25.55, 25.56. So we just made a high of day for Palantir. For Tesla, we'll see if it actually makes high of day as well. Isaac, that's great to know. Thank you so much for that. I really appreciate you. So NIO pushing up a little bit now. Let's take a look at Tesla on this chart. So the resistance that we had talked about yesterday, if you guys remember, or if you guys did get a chance to watch the video, was $716 or close to this level. Why? Because if you go over to the daily chart, that's where the moving averages are. So again, very, very important. The 21 EMA is sitting at 706 and the 50 EMA is sitting at 720. So this is like a breaking point for Tesla. This is like actually a breaking point, because if you do break out over this level at 720, that's the level that we talked about in my last night's video, kind of aligned with those two moving averages, then the bulls will kind of regain control, right? It's been a long time since Tesla has been trading below that level, and we have seen so much weakness. Now, in my opinion, these downtrends last a little bit less, or these uptrends last longer than these downtrends, because of how the nature of the markets. They have most certainly 66% of the times the markets have gone up, 33% of the times the markets have gone down over the last history of the markets. So the probability is skewed more towards the bulls. So which is why these uptrends, when they happen, so coming in from November till end of February, so you'll notice that the uptrend lasted much longer. And this right here is a downtrend. Doesn't mean that we're not going to see more downside. It could happen. But what I'm saying is that we need to see a breakout over 720 in order for that trend to actually reverse. And right now we're seeing a massive doji candle. That could be a lot of indecision in the market right at the testing point of those moving averages. So QQQ's back up, S&P back up, seeing some type of recovery. Q's back over 1%, S&P up over 80 basis points, being led by energy and financials. So energy and financials up over 1%. Financials really ticking higher. So let's go over from the market open. This is where the market's open. This is a really good indicator for us to keep a good job of the select sector indices. So again, it's got everything. It's got financials, energy, utilities. In fact, I would highly encourage you guys, if you are on your trading view charts pattern, just go over there. And in fact, I actually shared this pattern as well. But just simply add all these different indexes, right? It gives you a really good understanding on intraday which sector is actually leading, and that's driving the S&P higher. So if you were to look at this right here is basically a derivative of all these charts combined. So if energy financial is leading, that's driving the S&P higher, and tech right now is coming in at a close 1, 2, 3, 4, 5, 6, 7, 8, 9. So it's coming at a close 9. So we are selling off quite a bit, but energy financials, very, very interesting stuff there. And SPY and Qs again selling off because energy and financials and tech and healthcare are selling off as well. So let's take a look at this. Apple getting rejected by that middle VWAP, so it needs to break out over 121 because again, selling off, validating close to $120. Also a support that we talked about in my previous videos. 121 we are getting rejected. Tesla 700 kind of revalidating that level. And we could see some lower highs and lower lows, right? So maybe we'll see that. And then NIO also pulling back, breaking down below 44. So, and Palantir is the only one that's kind of showing signs of an uptrend, making higher highs and higher lows. So we'll see if that actually happens. So let's take a look at some of the other stocks. So Nvidia up a little bit over 2.5%, AMD up close to 80 basis points. So we're still in the green, but we are giving up on some of the gains. So Amazon up close to 61 basis points. Let's take a look at if there's anything going on interesting. Oh, this should be interesting actually.
Looking at the COVID sensitive sectors, that is the restaurant dining. So if you look at that data from OpenTable, it's moved up quite dramatically over the last 2 weeks. And so that's giving us the confidence that, look, the COVID sensitive services sector, which have been held back, will really come back meaningfully over the next 2-3 months, John.
So Chetan, for me, it's about 22 as well, and the amount of give back that we have in 22. So this big upgrade to 21. What's the give back in 22? What's the deceleration look like for you and the team?
We're looking for a deceleration, but look, we're looking for GDP growth to be at 4.7% in next calendar year. versus 7.3% this year. So as you can see, it's not decelerating enough as you would think from the base effect itself. And another way to look at this would be that we would be reaching trend output or pre-COVID path by third quarter. You mentioned about the levels being reached in this quarter, but when you're looking at the trend output, that will be reached by third quarter, and yet you will be growing at 4.7% next year. So I would say it's a pretty strong growth, and it's not going to be slowing down meaningfully. And the reason for that is, look, the households excess saving stock.
I don't sound like that, Ali. Do I? Come on. Come on now. I knew someone was going to bring that up. But anyway, so NIO up a little bit over 44.50. Apple breaking out over its middle VWAP over 121. Palantir making higher highs and higher lows, up over 6%. So it's good. Tesla validating 700. That's the level. That's the level that we've got a lot of demand at. We've got a lot of bulls sitting right there. So we'll see if that actually breaks out over that level and continues to trade above 700. Look at Palantir, may potentially even $27. That's their next resistance. So financials now leading the sector. Actually, no. Yes. Financials up on the race for the day. Up over 75 basis points. Energy down a little bit, up over 50 basis points. Tech is now coming in at a low close 6th. And then we've got consumer discretionary, so Amazon and Tesla up there coming in at a close 3rd. Energy is selling off significantly right now. So we are seeing some type of changes from these select sector indices. So energy just dropped down to 3rd almost. And then financials is leading the pack. So we got S&P still pushing higher with tech, and we got the Qs pushing higher as well. All right, so look at that. We are pushing up a little bit now intraday. We are 20 minutes into the open, and NIO is trading as high as 44.72, up a little bit over 8%. We got Tesla up close to 5%, Palantir up close to over 7%, and then we got Apple also up close to 33 basis points. Let's take a look at AMD and NVIDIA. So AMD is going to be trading. So GameStop up over 17%, trading as 290. Let's take a look at GameStop. Wow. I mean, let's take a look at the daily chart for this stock. Wow, it's making what a recovery. Anybody trading or investing in GameStop right now? That's pretty interesting. Yeah, it is close to 300. You're right, Rick. What do you guys think? Scott, I don't think I have one. I don't think I have a very, very heavy accent. Three shares at 130. That's awesome. AMC also pushing higher. Yeah, I mean, this has been a really volatile stock, but if you made some money on it, congratulations. I mean, definitely AMC also making a move up over 13-14%. So NIO, Tesla, Etsy, Palantir, AMD up a little bit over 1% now. Hard to reach 2% inflation. First name, who are you referring to? Who are you referring to? Is it going to be hard to reach 2% inflation? I don't have a plan of coming back anytime soon, but we'll see what happens in the future. So definitely a lot of buying momentum coming in, and Palantir validated $25, kind of like a double bottom support here before pushing higher to over 26. NIO also just made a high of day at close to $45.18. So that's a good sign. And then Tesla also kind of validating 700 here before pushing higher. And then Apple needs to kind of validate 121. We've got QQQs up over 1.4%. S&P is kind of catching up to the Qs, up over 85 basis points. And then this right here is going to be the select sector. Let's take a look at who's leading. So we got financials, and now energy is down 4th. We got consumer discretionary, materials, and communication services leading, and even though tech is selling off. That's interesting. Lemonade up over 5, Tesla up over, IPOE, Square up over 5%, back over 236. I really missed out on Square, you guys. I really wanted to start a new position on Square under 200, but I just really missed out on that one. ARKG, so that's the thing, like these stocks go like down and up like so fast. Like this all happens in a matter of days, like because the news gets priced in so like rapidly, so quickly that, you know, it's really, really important that we take advantage of those opportunities like immediately. All right, let's take a look at some of the other stocks very, very quickly. I'm going to break down. So let's take a look at Fubo TV for you guys. Oh, 30 minutes back in the stream was whenever newscasters were playing. So that was Bloomberg. So what they were saying was 2% inflation is happening. So like a lot of people are expecting that. Of course, March, we're going to see the base effect. In February, you know, the oil prices was the biggest catalyst, with oil prices surging the most, up over close to 9%. Energy commodity prices, and then everything else was kind of stable. So food and kind of like apparel, used cars, everything else was either down month over month or slightly up 20-40 basis points, but oil prices was the biggest one. So core CPI excluding food and energy is ticking down. So excluding food and energy is taking down. So core CPI, that's going to be the red line. And then when you include food and energy, that's actually ticking up. So that's going to be all items. So you'll notice that's the line in blue. We're pushing up, we can consolidate, and we're pushing up higher even more. So the expectation is that we are going to see it surge over 2%. But the market really needs to decide, and in terms of psychology, you know, what are we going to see in the future? Are we going to see a really, really rapid rise in inflation, well over 2%, or if we're going to see like a reasonable move in inflation, modestly run over 2%, and then that's what the Federal Reserve also wants. So it's kind of hard, Raiden, and again, it's very, very interesting. It's going to be for the markets and how they react to the money printing. All right, so you seem to be very negative towards the macro side of things. I'm interested in your opinion on all the money printing. So, I mean, obviously it's not going to be great for the economy over the long term. I mean, the reason why we have the bond auctions is we need to raise $38 billion through debt, right? And that's going to be today. We're going to find out about the yields. We're going to find out about the bond prices. So, I mean, I'm very cautiously optimistic about the macros. Like, you know, looking at the yields, looking at inflation, looking at the labor market, the underlying economy that's improving month over month, and like even taxes wise, that's the only headwind that I have in terms of like some type of a cause for concern from an investment standpoint is taxes. And we know with the new administration, long-term capital gains, corporate taxes are also going to potentially go up. But again, the closer we get to next year, the better off we're going to be taxes wise. But underlying economy, you know, it's improving. We're seeing a lot of although unemployment rate, we're not going to get into those because a lot of people say that 6.2% is kind of like the headline number. The real unemployment is well over 10% because a lot of people are still under insurance claims and a lot of other things. But we're not going to go into that in too much detail. But again, cautiously optimistic about the economy and the markets moving forward while keeping a close eye on the risk factors and some downside and some support levels as well. So let's take a look at the markets. We are pulling back a little bit. So NIO kind of retesting 44.50. Tesla coming down to 706. Palantir kind of staying above $26. Apple is also pulling back. We've got QQQs making some type of lower highs. So QQQs were not able to make any type of high of day. So that's the only kind of like a drawback for the NASDAQ ETF. So we'll see if we do see any type of upwards momentum for that stock, for the index as well. So Fubo TV up a little bit over 9%. Let's take a look at some of the metrics. So for anyone who's asking about Fubo TV, or Fubo TV. The next resistance is going to be sitting at close to $32. You know, even as high as like the breakout over 21 EMA is going to be very important for the stock right now. Previous resistance, you guys will notice that we kind of got rejected at that level. This right here, then we back tested as a new support, and it's pretty much the pattern for a lot of stocks out there, right? We have been making this downtrending channel, making lower highs and lower lows, so it does need to break out over that moving average. It does need to break out over $32, I would say, close to $32.50 in my opinion, for us to see any type of a potential trend reversal, and then we'll worry about $36 because that is also going to be a very, very important sort of resistance that we need to watch. Daniel, thank you again for joining in. I really appreciate you. And yes, I'm using the TradingView platform. If you want to use this platform, if you want to get access to my TradingView charts, the link to the Patreon is going to be down in the description below. So DA, the auction is at 1 p.m. Eastern, so you can also go to this website. Actually, that's the wrong one. So this right here, you can go to this Treasury Direct website to kind of learn more about their issuance. So Treasury Direct, and you'll notice 38 billion, 310, that's going to be today, and it's going to be at 1 p.m. Eastern is when we're going to see the Treasuries auction for 38 billion 10-year notes. Very, very important for the markets as well. So, all right, so we are seeing some type of a pullback now. The Qs should be dropping, and these SPYs dropping as well. So we're expecting all sectors are pulling back except for utilities. So intraday, financials, energy still up. Tech really taking a slide here and pulling back. So utilities kind of curling up. They were down. They were like at 934. They were the biggest loser on the day, underperforming all the other sectors. And now and tech is now the biggest loser on the day, down about 34 basis points. And we got energy and financials up. If you were to kind of scroll in a little bit further since, let's take a look, 950. Energy and utilities have been the leading sectors, and then tech has been absolutely selling off. So that's resulting in NIO dropping below 44, Tesla dropping around 700 once again. All right, let's take a look at Open Door really quickly. So Open Door, again, that's the resistance that we talked about, I think, in my previous live stream, at close to 2340 levels. Again, that's where the 21 EMA sits. Previous resistance, old support, and previous resistance as well. So that right there would be the level to watch away. So it needs to break out over 2350, I would say. So right now it's kind of like up there, so it needs to close above that level, I would say. To basically close above the 21 EMA and break out over that resistance. If you go to the daily chart, we're still a long way away from those moving averages, because in the past you'll notice that level has consistently acted as a support here, the 50 EMA support here, 50 EMA support here. So we still have a little bit of work to do for Open Door to kind of regain control back over to that level. So the RSI, the MACD, again ticking higher a little bit. So the next resistance to watch is going to be sitting roughly at this 2350 level, and a breakout over that level and a close above that level is going to be very important. So Tesla, again, validating 700. We're kind of like hovering right at that level, and NIO is now struggling to break out over 44 once again. Palantir is pulling back, now trading as low as 25.87, and Apple is struggling a little bit as well. But Amazon is still up there. We got ARKG up close to 3%, and Square also up there, CCIV up there. AMD is now pulling back a little bit, and Shopify is down in the red. Shopify is another stock that I'm really, really inclined to starting a new position in. What do you guys think about Shopify and Square? Overvalued, undervalued, great companies in the future? What do you guys think? Peter, the payment is at the first of every month. So if you were to join now, it's usually still the first week of March right now. So you will get charged like April 1st. So it's the first of every month is when you get charged for Patreon. And again, billing is all controlled by them, so like there's no way for me to actually like adjust that anyway. I can like, we do a lot of stock analysis for individual stocks. So what we do is I'll create a post where you guys will be commenting, what stocks you want me to look into, and then we have a private Patreon live stream where we break down individual stocks for all of you guys, for all the Patreon members. So it's going to be a private live stream. There's not a lot of people anyway. There's like 200, 300 people. So we go over like 25, 30 stocks and basically going over my technical analysis on all of your stocks. Shopify overvalued. Square will disrupt the financial sector in 2 to 3 years. Gibran, the Patreon link is going to be down in the description below. So all these charts are going to be available to you guys. They're going to automatically sync every time I make changes. I shared 4 charts this morning, and you'll also get access to this one. So that's going to be the select sector index chart that goes over which sectors are actually leading on the day in the past month, in the past year, so on and so forth. So 4 charts, and you'll also get access to the Discord, and then you'll also get access to the growth portfolio as well that I just started in February. Square's future is extremely bright. Bar, thank you so much. I really appreciate that. Again, thank you very, very much. And Sebastian, again, check out the link down in the description below. You guys can check it out, depending on the pricing levels for all those. But again, you don't have to. It's only if you want to get more involved with the money investing community. It's just an option available for you guys. Thank you so much, Bar. I really appreciate that. So Tesla hovering around 700. We got Palantir hovering around 26, and we got NIO hovering around 44. Keith, yeah, I mean, I couldn't agree with you more. It's fundamentals do matter. The valuations do matter at some point, but it's all about controlling the narrative, right? I mean, you'll see when it's like you can almost feel it, right? You can almost feel it when you kind of log into like all these media sources, and you're like hearing how they word it, hearing like negative news or like anything that's kind of controlling some type of a narrative. It's almost that you can feel the weakness and the downtrend in the patterns for these stocks until that changes once again. Bullish on Square. Shopify is overvalued. What do you guys think? Shopify over Square or Square over Shopify? Guys, again, thank you so much for smashing the like button. Again, let's take a look at how many people we have. So 700 exactly. Wow, you guys are awesome. So thank you again so much for this. We'll see if Tesla continues to validate 700 on the day. Big with automation and vehicles. Square is? Mohit, how are they going to be big in automation? I'm really interested and curious to find out. Big with automation and vehicles. Alan, thank you so much. Yeah, we're trying to get to, not me, all of us. So you including, we're all going to hit 50,000 subscribers together, right? So very, very excited about that as well. Square all the way, DraftKings, Square, Square over Shopify. So yeah, I mean, this right here is going to be the chart for Square. I'm going to start another main chart here. So Square is, anything under 215 and 200 is kind of like the levels we're watching. So you guys will notice that we kind of validated that $200 and $215 yesterday before actually gapping up, jumping over 4%. So we'll see if we actually break out over those 2 moving averages, and the next resistance to watch for Square is going to be sitting roughly at $245. That's going to be the level to watch moving forward, kind of aligned with this resistance. We've gotten rejected at that level a couple times here. So I studied finance in school. So again, previous resistance got rejected a little bit here, and we're gonna retest that level moving forward as well. So let's take a look at the select sector. Since the open, we've got energy financials coming down, real estate pushing higher. Wow, like we're seeing so much changes intraday. Now real estate is the leading sector. Tech again lagging, pretty much flat. Qs are again pretty much flat, so we're forming some type of a symmetrical triangle intraday. So if I were to kind of map out some of these higher lows and you know, some of these lower highs that QQQs are making intraday. So let's take a look. So we are making some type of lower highs. We are potentially even making some type of higher lows. We'll see. We'll see where Qs trade intraday. But SPY is definitely pushing higher with a little bit of tech help and a little bit of financials and energy help as well. Automation vehicles, I was referring to the taxis and transits. Oh, okay, gotcha. Yeah, that makes sense. Let's take a look at SPCE. I know there was a lot of SPACs that got hit very hard recently, right? Including Virgin Galactic. What do you guys think about this stock? I have done one video on this stock, and this was like back in like 8 months ago, and this was like, I want to say like June and July of last year. I did one video on this going over the stock, and I love the concept. I really like the concept of you know, Virgin Galactic. It's just, to me, it's like scalability wise, you know, how much can they scale, because they're already kind of targeting sort of like the top of the top when it comes to taking people in outer space. And I could be wrong. I haven't done a lot of research on this company since then, but scalability wise, that was kind of like the only issue for SPCE. But I know that it's had a really incredible rally all the way to $60. But what do you guys think about Virgin Galactic? Square will launch music NFTs with their title acquisition. That's actually a great point, and I want to learn more about NFTs as well. Something that I'm gonna you know, do a lot more research over the weekend to learn more about, you know, how these tokens and fungible tokens actually work. So maybe I'll address that in one of my videos. So NIO actually ended up making lower lows like on the day, and Tesla is still validating that lows of 693 intraday. Palantir is still pushing higher up over 26. NIO kind of struggling under 44. And Apple is also forming a very similar pattern as to the Qs, right? We've got Tesla back over 700, so it's just going to be like a back and forth a battle for Tesla. So Qs. Thank you so much, Amit. I really appreciate that. Thank you so much for joining in. The Qs are pushing down a little bit, up only 85 basis points, and the SPY actually just broke down below the 50 EMA for the first time since pre-market. So that's a little bit of a cause for concern, and I would not be surprised if we do see like a little bit of a pullback for the Qs and the SPYs. I mean, come on, you guys. I mean, when you have utilities kind of leading the sector, you already know that this is going to be a pretty tough day to come out of. Because right now, yeah, I mean, we've got utilities kind of leading a little bit the last like 15 minutes. Now it's like energies pushing up over 0.5%. Let's take a look at energies. So we are up. Let's also add like the UK oil, and let me add US oil. So we got both Brent and crude, $68, $64 a barrel, and we are up also on those. And then let's take a look at the main watch list. We got the 10-year yields slightly up, about 1%. SPCE keeps repeating the same story. This is TradingView. So everyone who wants to join TradingView, again, it's absolutely free. You don't need to have a subscription, although they do offer some extra features, but you absolutely don't need it. Like, you can have multiple charts with different indicators, and as long as you're not too concerned about the ads or anything, TradingView is great. Like, I absolutely love this software. I've been using this platform for well over 3 years now, and is this a gem channel? I don't know what you mean, Ricondo. Alright, so the Qs are kind of staying up there with those higher lows, up just over 1%. We got Open Door up over 9%. Let's take a look at some of the other stocks. So let's take a look at some other stocks here. Let's take a look at Shopify. Down slightly, about 0.5%. So for Shopify, anything under $1,000, you know, I'll really consider maybe taking a position on this. So we did retest lows of about 1,021, close to 1,020. But if you do see another breakdown below that support, you know, then the next support we're going to be watching is going to be $875, kind of like here, like all the way down to the support, which again has acted as like a triple bottom here for Shopify. So much consolidation in that range before a breakout. That's a great question. So how to make a composite chart of making multiple charts into one index? It's very, very simple. It's like, oh, the Qs are selling off aggressively now, and so is SPY. So again, we are breaking down below those moving averages. So Tesla now below 700 once again. NIO is giving up on some of those gains, trading as low as 43. Palantir staying up there over $26, $27, so that's good. And Apple is also pulling back. For that, you basically just simply go, you know, any ticker that you want to add, like XOM, and you just put the plus sign, and then you add another stock like CVX, and then you can add like US oil, and you just keep adding whatever you want. You can even multiply. So you can put like an asterisk for multiplying. You can subtract, like put a minus sign. So it's pretty cool because it's HTML based, so you can do a lot of different things with those patterns and create your own indices as well. And somebody in our Discord also shared like a portfolio that they created on TradingView, and they basically included all the stocks that they have on their portfolio. So to give you guys a very simple example, and this is pretty cool stuff. So like if you're someone who has like, let's say Square, or like Square, and then you have Shopify, and then you have, let's say, PayPal, and then let's say you have Apple in your portfolio, you can just simply hit enter. It's going to create an index for those four stocks, and you can go over to the daily chart, and this right here again is going to be literally your portfolio line, because those are the stocks that you have, right? So it's going to plot those moving averages, it's going to plot that MACD and the RSI for those four stocks, and it's going to be market cap weighted. So you'll notice that combined those four stocks are up close to 70 basis points on the day, trading as high as 1,731. So that I think was pretty cool to look at as well. So Tesla kind of hovering over 700, NIO hovering around 43.50. We've got ARKG up over 3% now. QuantumScape up over 4, Tesla up over 4, Lemonade up over 4. We got Plug Power up over 5%. Yes, you can market cap weight it, or you can price cap weight it. You can do a lot of different things with it. We got Enphase up over 8%. Enphase is really pushing higher, right? 160, it's trading all the way as high as 160 now. And AMC is the leader ahead of earnings right now, up over 14, almost 14%. So Nvidia up over 3. AMD is selling off for some reason, while Nvidia is up over 3%. I mean, it could also be the reason why Nvidia has been down substantially from its all-time highs, as opposed to AMD. Let me take a look at Teladoc. I don't know if I've done an analysis on it. Maybe I have. So that right there again is going to be the support level to watch at close to $181. And there's not really much of a resistance, but you know, as long as that support continues to get validated, I do see a lot of upward momentum for the stock, considering the RSI, the MACD. Very, very oversold, trading as low as 32. And then if you do see a potential crossover for the MACD as well, 180 or $181 is going to be the level to watch for Teladoc. But there is a lot of upside potential, at least up till as high as $200, $214, $215. That's going to be the 200 simple moving average. Again, a lot of support there. And then we got the two moving averages, the 21 and the 50 EMA, sitting as high as 235. Alright guys, so I'm actually going to end the live stream here. because I think it's been a little bit over an hour, maybe an hour and a half, or close to 2 hours. But thank you so much for joining in. I really wanted to break down the inflation report, so the CPI that came out at 8:30 a.m. Eastern. I'll put out a separate video going over that report, because all of this is going to be very, very important for us to look at, right? It's going to be incredibly important for us to understand the inflation and the bond market and where the yields go, for us to understand where the markets are headed. So thank you so much for joining in. Again, the markets are going to be fine. I know that, every time. Yesterday I went to bed and it basically skyrocketed, right? Close to over 4% for the Qs. So thank you so much for joining in. I really appreciate you guys. If you guys want to get access to the Discord, the TradingView charts, which are all going to be available, automatically sync over to your charts as well. The Patreon link is going to be down in the description below. But again, make sure that you drop a like. If you're new to the channel, subscribe. We talk a lot about fundamental and technical analysis, and make sure that you guys hit that notification bell as well. So thank you so much for joining in. I'll do this regularly, almost every day or almost every other day. So we're going to cover a lot of tech stocks, and I'll be here always to make sure that the markets are doing okay and we're not panic selling into all this fear. So again, thank you so much for joining in, you guys. I will see you guys in the next video.